What's up guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update as of 8/10/2022. And then Donald Trump, he's also being investigated by the FBI, how they got a search warrant, why appraisals are so important in this whole entire case and scenario with Cushman, and exactly why are they hiding it. I'm going to explain to you in details exactly what they do as this asset management company and why they actually even give a shit and why they care so much about it. Okay, so but as far as the mortgage rate updates go, we have increased a little bit on mortgage rates as of today, but they're all kind of teetering somewhere between the 4s and the 3s on the 15-year. But let's go ahead and get on with it. As of 8/10/2022, 30-year fix will be sitting at 4.60%. 15-year fix will be sitting at 3.70%. 30-year high balance will be sitting at 4.72%. DSCR loan, which is a debt service covered ratio. This is a loan product for people who are trying to get into the rental side of business things, and they just want to go ahead and qualify the total income that is coming on the property rather than using their own W-2s because maybe they won't qualify. Now the debt will be the total principal, interest, tax, insurance, and the service is going to be the amount that's going to be coming in on rental, and then you're going to go ahead and do that as a ratio. Typically, if you have $1,000 coming in rent versus $1,000 coming in as going out as principal, interest, tax, insurance, then you have a 1-to-1 ratio, and then you're all good to go. Bank statement loan will be sitting at 7.90%. This is another non-qualified, non-agency program where you don't have a W-2, you don't have tax statements, you don't have any of that stuff. All we do is we pretty much look at your bank statements, and then we go ahead and do a ratio, and we calculate your debt to income based off of that. FHA 30-year fix will be sitting at 3.95%. 7/6 adjustable rate mortgage. A 7/6 adjustable rate mortgage is just that. It's going to stay fixed, interest only for 7 years, which is the first number. Then it's going to get adjusted every 6 months after that. That'll be your overnight financing rate. That'll be at 4.80%. USDA 30-year fix, which would be one of your zero down payment programs, will be 3.94%. VA 30-year fix is a veterans program. That is also a zero down payment program. That is going to be sitting at 3.96%. And then a hard money fix and flip will be sitting at 9.25%. So before we get into the numbers, as everybody knows right now that, Donald Trump, he is being investigated by the FBI. They just got a search warrant to his house. And before we go any more into this video, for up to 50% commission rebate, 0% listing on selling your current home or any of the mortgage products I just stated, link in the description below. Now that I got that shameless plug out of the way, but go ahead and let me try to beat your big bank, at least here in the state of California. If you have a mortgage product and you're going to do it anyway, at least put me on the top lender list to see what I could go ahead and do for you, because God knows that I am better than the national average and I'm better than most big banks. Do I win them all? No, don't win them all. But can I win most of them? Hell yeah, I can. And I will always try my damnedest, and I'm way better and quicker than most of those other big banks. But now that we got that out of the way, so what we need to understand is who is actually getting fined right now. So the person who's actually getting fined right now is this asset management company, Cushman and Wakefield. So what they do is this is a pretty much a two-part company. Okay, so this part company, now listen, this next part of this explanation, I have no political bias on one way or another. These are just facts. So before anybody sits there and gets their panties in a bunch by anything I am about to say, I am only speaking factual regardless of what your feelings are about anybody within this realm and within anything that's happening. Okay, my political views mean shit. They don't mean anything. Now that we got that out of the way, now that we're all good to go. So Cushman & Wakefield is an asset management company which also does a bunch of appraisals. So let's go ahead and see exactly what kind of appraisals that we have. So you have to understand there's four different types of appraisers. Okay, first you have your trainee appraiser. Now this is one that has to get a certain allotted amount of hours, about 1,500 total residential real estate hours in doing inspections in the course of a year for them to go ahead and get to the next step, which is a residential appraisal. Then you become a certified real estate residential license, and then the big kit and caboodle. Now this actually requires a 4-year college degree. It's like 3,000 hours worth of real estate appraisal. Now this is the person that could do any of them. that is called a certified general licensed appraiser. Now that is the person that does majority of these big businesses, these big high rises, these big buildings, because they're the all encompassing. Because so on the residential appraisal side, you do, let's say, 1 to 4 units, maybe you go a little bit above that, but majority of the time when you got these big buildings, you're not going to have a single way to go ahead and do an appraisal, which you're also probably not going to get just one appraisal. Usually it will take 1 appraisal, 2 appraisal, 3 appraisal. It might even take 4 to 5 appraisals. One will never cut it. And especially when you are doing a lot of like these investment type properties, which majority of the buildings, now I don't know exactly how much on the books or off the books the Trump family owns as far as commercial residential real estate, and how much exactly Cushman and Wakefield are owning. Tentatively on the books, what they're reporting is about 17 million, but who knows? I highly doubt that's really the number. I think that's way lowballing it, like, by a lot. But that's how much they're managing overall. So now that we got the different types of residential appraisals out of the way, now the other part is majority of big banks, private financiers, private investors, syndications, all of this, they use an AG. Okay, which the A, of course, like we just talked about, your appraisal, your general appraiser. Your general appraiser is going to be with one of these guys, and then they're just not going to do one way. They're going to go ahead and do a bunch of different ones. Now, the ones that they do, there's going to be, I hope I'm not boring most of you, but this is like the technical stuff, just so you know. Now, the reason why there's so many different appraisals, because well, they don't trust anybody. Back in 2008, what we used to do is we used to grease appraisers, right? We used to grease appraisers. We used to give them a bunch of money, and then they used to overinflate the price of it. So if I needed an extra $100,000, I give the appraiser like $5 grand. I'd be like, yo, dude, do me a favor, go ahead and bump this up so I could cash out, refi a little bit more. He'll be like, no problem. And now after that, we have the SAFE Act. You know, you have to go to the National Mortgage Lending System, the NMLS. You have to go ahead and get certified through there, but that's neither here or there. So whenever you're getting, now the reason why these are really important is because this is how you get funding, and then this is how you go ahead and test out what your liquidity is, test out your asset. This qualifies you based off of more real estate and more things that you could go ahead and buy, and then it could also offset your total taxes depending on how much you want to depreciate or appreciate on your taxes to see where you're going to be at. That's why majority of people that actually pay a lot of money. Now, appraisals, you do one thing that's called a cost approach. The cost approach is just technically how much the property is valued. Number 2 is going to be a sales comparison. This is majority of real estate residential, where we could go ahead and compare one property to a sold of another property. And majority of commercial big, buildings, specialized buildings or whatever that is, you can't really do a sales comparison. You would have to do something more on a income capitalization approach, which is the major one that majority of companies do when it comes to, income producing properties. Now, when you have a commercial, you have buildings that have leases, which companies like, you go to a dental office or a doctor's office, or you go to whatever company headquarters are typically at that building, and then that's where you get the income capitalization rate. Now this, sees how much money you got coming in versus how much money you go out. Like I just explained, the DSCR loan, the debt service covered ratio, it's kind of like that, but a little way more intricate. Now the reason why majority of these appraisal documents are being investigated is exactly what we used to do. If we needed something to go up, down, we go ahead and tell the appraiser, and then this is the way that we get funding. Funding is one of the big things because you have to know the history of your business. You need to know the management. You need to know the product markets, the purpose of the loan, the financial analysis of business, the collateral of analysis, and financial analysis of any of the guarantors. Now, who's going to guarantee this loan? What kind of collateral do you have, and how much is it worth? These are pretty much basic things that anybody with some sort of common sense could go ahead and calculate, right? You could go ahead and see, hey, how much do they have here? How much do they have here? But if you're greasing somebody to go ahead and give you something either overinflated or underinflated, depending on which route that you want to go, that could go ahead and change the course of your taxes. It could change the course of what you're going to go get qualified for if you want to buy more, so you could undervalue versus overvalue. You could do a lot of that. And then when you have these big income producing properties, appraisals are not single like just one time, like when you buy your house. They're continuous. They have to keep going on because they're constantly pulling capital in, capital out, and they're doing other big projects. Now, the biggest thing, of course, is going to be your liquidity. Your liquidity is one of them, and that will go ahead and allow you to go ahead and see, hey, are you going to be meeting your current obligations? And that will go ahead and leverage you into, you know, whatever else you're trying to get funding. Now, the reason why appraisals right now are currently very, very important, because let's go ahead and do the song and dance over again, because the stupid goddamn pandemic has ruined things in a way that we haven't experienced before, especially when it comes to working at an office. Working at an office, we have about 15.2% vacancy rate. When we calculate things on commercial side of lending, especially when it comes to occupied leases that are existing, or we're forecasting whatever it is, if you're at a loss at 15.2%, which this is on average, and you are depreciating the total square foot price per square foot that you're charging, well, that's going to be a little bit different from you to go ahead and say, hey, this is how much we made, this is how much. 15.2 might not seem like a lot, but it is astronomical when you're dealing with million dollars. 15% of $1 million is $150,000. That's a lot of money. When you have total, like I think they have 8 total high rises in New York. God knows what the gross leases are on that, and versus the net leases that they have going over there, that's astronomical. So if you want to know why they want these appraisal documents so bad, that's exactly why. Now, you got to admit, the guy's a genius when it comes to real estate, when it comes to taxes, when it comes to all of this. He has the right people working in the right places, and he knows exactly what to do. Cushman Wakefield is a big company. I mean, they took the risk of getting fined 10 grand a day every single day until they gave up the documents. God knows, I'm not going to be, I guess I'm speculating here, but if you're going to be a speculative man, you're like, if you got like 3, 4, 5 days worth of time to go ahead and see what you could do with those documents that were being asked, because they're an asset management company. If they want to go, and they were doing the appraisals themselves, right? If they were doing the appraisal themselves, or they had somebody that they knew were doing the appraisal on the other side, or they have another person that's doing another appraisal on the other side. And if you're making, let's say, as an AG, $120,000, $130,000 a year, and this guy comes along and gives you an extra $200,000, kind of tempting, isn't it? Well, that's exactly why they want these appraisal documents so bad. So if you like the content, please like, subscribe, comment for up to 50% commission rebate, 0% listing on selling your current home or any mortgage assistance. Link in the description below. And if I didn't clarify anything that you wanted more clarification on, or I just kind of went over it when I shouldn't have, comment below. Let me know. I'll be more than happy to answer any of the questions. Until next video, guys. Peace.